is going to be suspended for the day. Okay, step number 4, and this is a very important step because it is part of determining the channel itself. We're looking for 60% of the reviewed bars over the past 30 minutes on a 1-minute time frame to fall within a 30 pip range. And we've tried to change this 60% parameter to, different parameters in our testing. We found that 60% is really the optimal parameter. Anything below won't give us an accurate reading to the price channel itself. Everything above 60% filtered out too many trades. So 60% is the optimal reading that we have arrived at. And then obviously, if there is a confirmation of step number 4, we move to the safety indicators in step number 5. And let's go ahead and review this. For step number 5, we're going to determine that the channel is safe and reliable. When the robot arrives at step 5, it already determined that there is a price channel, tick volume is fine, spread is fine. Now we want to know how healthy the price channel is. We want to know that this is a reliable channel. We want to know that it has a high accuracy rate regarding the established highs and lows of the channel. Obviously, by accurately assessing the channel's length, time-wise, reliability and range, high and low price, we managed to really find extraordinary trading opportunities. So in order to accomplish all this, we designed 2 tools in-house and a third tool, which is not an indicator as such, but more a method to access successful breaches of the channel. Tool A and Tool B. Tool A we call PAI, which is a price action indicator. And this indicator produces a proprietary ratio of price rate of change and pip range. A trade will not be entered if the PAI reading is below 30. Tool B, mean deviation index, MDI. It's important to know that price doesn't strafe too far from the center of the range for prolonged periods. This indicator provides a reading between 1 and 70. Anything below 40 results in no trade, as it means that price has been persistently on one side of the channel and there's a high probability of strong breakout. When a price channel forms and price moves up and down within that price channel, and then suddenly it starts consistently remaining on one side of the channel and not going back to the other side, there's a very high probability of a breakout in that channel. These breakouts sometimes result in high price swings. So this MDI indicator pretty much does the job of securing that scenario for us, so it's not going to happen and hurt us. Anything below 40 results in no trade. Tool C, the 1-minute close method. This is a very simple yet very powerful leading indicator. If 3 or more 1-minute bars close 5+ pips above or below the established channel from step number 4, it means that there's a high probability of a breakout and no trade is taken. Of course, if all 3 indicators are in line, the robot proceeds to enter a trade. And the last thing I like to say about this is PipJet's trade entry criteria is very strict. We made it that way because we wanted to filter trades that fell below a certain level of success probability. We wanted to keep its accuracy rate up. The methodology used to enter the trades is based on accurately assessing volatility changes in the market, price deviations, support and resistance levels on different time frames, and other observations. Again, what's important here is to know the strictness of the trade entry criteria. That's one of the reasons for the robot's high accuracy rate. The trade entry based on a proprietary indicator, which is a combination of RSI, CCI, parabolic SAR, and Fibonacci levels. A buy is triggered when the indicator is at 300 or higher, and a sell is triggered when the indicator is at 200 or lower. And let's go ahead and go on to trade management. When we talk about trade management, we start with the profit objective for the robot. Before we go over that, though, let's look at the inside here. If you've ever designed robots, or if you're a manual trader, you know that one of the toughest parts is the take profit. You know, when is the optimal time to exit a trade? How many pips should you aim for? Everybody knows you have to have a good risk reward ratio before you even enter a trade. That's important. It's a rule of thumb. But then that doesn't help us that much. It's really tough to know what the optimal, and I stress optimal, place is to exit the trade once in profit. We worked really hard on this part of the strategy. We did a lot of testing, a lot of split testing. We ran quite a few live accounts before we reached what we believe is the optimal mechanism to accomplish this objective. Our research shows that establishing a PIP-based profit objective underperforms over 80% of the time compared to a profit objective based on market conditions. So what traders fail to understand many times is that a profit objective should be placed according to market conditions and not according to when you as a trader reach the number of pips you want to capture. That's irrelevant. The market is going to tell you how many pips it's willing to give you. That is the guiding philosophy behind PipJet's profit objective. The robot strategy aims to capture the most pips within the market context. Very important, the market context of the trade. Hence, the indicator-based profit objective method used. Now, let's cover that last part, the indicator used. The profit objective. For buy, long trades, the indicator reaches the 900 level within a maximum of 6 hours from entry. We've tested quite a lot of variations for both the 900 level parameter and the time, the 6 hours that you see here. And obviously, because this is how the robot is trading now, this is what we found was the best. We started being a little more liberal at the beginning. That 900 level was actually 700. We found that we weren't capturing enough of the profit potential the market offered in the context it was trading at that time. We moved it to 900, and that really did the job, as well as the 6 hours. In the beginning, the 6 hours was 12 hours, and then we lowered it to 9 hours, but 6 is really just the optimal setting for both buy and sell take profits. If the 900 level isn't obtained within 6 hours and the trade is in profit, the strategy implements a trailing stop. For sell short trades, the indicator reaches the minus 200 level within a maximum of 6 hours from entry. Again, we did a few tests with different numbers, and the best results are being reached with these numbers that you see here. That being said, we do update the robot continuously. If you're a Forex Megadroid customer, you know we update our robots every single time there is a need. Maybe changing market conditions, changing technological or regulatory conditions. We update our robot every time there is a need. We constantly monitor for the best parameters. You know, market changes, there's no way around that. If you've been part of our team, you know we react very fast and update our clients at no cost whenever the need arises. If that minus 200 is not obtained within 6 hours and the trade is in profit, the strategy implements a trailing stop. The lifetime of each trade has an 18-hour maximum. I'll mention that it's extremely rare for a trade to be open 18 hours, so you don't really need to worry about that. The stop loss, basically what happens with the stop loss in simple terms is the robot initially computes a maximum and minimum stop loss limit. then it computes the desired stop loss based on volatility and range of price motion from the previous day. Again, you see what we're doing here. We establish context. What is the market doing right now? Depending on what is going on right now, the robot acts accordingly. Although initially it does compute the maximum and minimum stop loss limit according to today's specific market conditions and what's going on, the robot computes the desired stop loss based on volatility and range. If the desired stop loss is more than maximum and less than minimum, it uses the maximum and minimum stop loss that it computed initially. Otherwise, it uses the desired stop loss that it computed according to market context. Okay, guys, that is PipJet's strategy. I know it's a lot of information for somebody who isn't a trader and hasn't been doing this, and that's fine. The thing that's important here is that you need to know what's going on behind the scenes. At the end of the day, the robot's going to do everything that it does, and it's going to do it really good, accurately, and profitably. But as the developers, it's important to us that you, as a client, know what's going on and what the robot is doing. You know, not just plug the robot in and let it go, but that you know what it's doing, and we insist on that. All right, I'm going to wrap this video up, and in the next